Stock market weekly chart review for the week of January 30th through February 3rd. Right now we're looking at 12 sectors of the stock market. We're going to look at, for these sectors though, we're not going to look at a weekly chart, we're going to look at a monthly chart. So each candle is 1 month, and we're looking at 3 years of data. We see with technology, this is February, right? That month is just starting, but here's January. So January ended with an up month, but I really want to point this out to you, right? Really, all we did is make up one the price we lost here in December, and so this month is starting above January, which is good. But looks like we got a green bar, red bar, green bar, right? This is getting ignored. The reason why I'm pointing this out though is that when I look at this, I'm less excited about the move up. I think that what would get me a little more excited, I want to see technology maybe like up around 160. It seems like 160 is has some resistance when it's below it, right? So really low volume. Some people say volume doesn't matter. Some people say it matters. Regardless whether it does or doesn't, we just take note. Let's look at what else we have. Healthcare. For the last 2 months, healthcare has just moved down. The one thing that I do want to say though is that you can, as a positive for the bulls, is that how quickly, like we look at when we have a big move in price, we look at how quickly, if let's say we have a move to the downside like here, how quickly does it take for prices to regain back up to here? Well, in here it dropped 1 month, regained back in 1 month. So that's pretty favorable to the upside. I just think that that's some steep resistance. So let's see how the rest of this month plays out to see get a better idea of what's going to be happening. As I mentioned, so basically in 2 months we had an up candle here, and 2 months later we're down here. Third month we're down here. Technology is, as far as the S&P 500 goes, technology, I think last time I checked, makes up most of the S&P 500, but the healthcare sector is I think the second heaviest sector in the S&P 500. So we got technology trying to move up and moving up, got healthcare moving down, financials kind of just going sideways, but we had a nice, pretty nice green bar right here, really strong one here. Prices then opened above this candle, closed all the way up here, and then in the month of December just really dropped. And then just like with technology, we regained all this, and here's where we are. But so far just kind of going sideways. Doesn't so much surprise me, right? You see kind of in this area, it's not surprising if it's going to start getting some resistance around this 37-ish area, 37 and a half, whatever. And also it's like not the strongest volume, where you see in this move up here it seemed like it was a little bit stronger volume. Just seems like less money flow. Industrials, you can see that moving sideways, right? But again, we got this prices pulled back. We have a nice candle here, two nice months in a row where prices dropped, boom, regained the next month, even a little more. Following month opens up higher. Month is this November. But then December, prices opened same place they closed and sold off about halfway through. And then This must be January, right? Prices just regained this back. So it looks like, this 107, we're reaching where it peaked kind of last time, right? So this one's a little closer to us. Maybe we'll have an idea. Volume had a strong amount of volume this month. Basic materials kind of looking the same, right? I wouldn't be shocked if we're just gonna have more sideways action as I've been stating, but we're kind of getting closer to this like 90-ish, whatever, 92 area, and especially with this 85 seems to be giving some resistance also. Prices seem to be getting closer to it, peeking over it. Let's see if they can maintain. Really seems like the volume's kind of dwindling here. Less, kind of about the same. I have no idea where the volume is here, so we're just gonna forget that. We definitely had volume because it was trading. I think it did that to me before, and then it reappeared, but whatever. So we see here is January, really strong candle January, and starting off looking pretty strong, but it's got a lot. It's really sold off quite a bit, but looks like it might be bottoming right in here. Looks like also the 60-ish area could be a place to watch. Like maybe see if it pull back. Let's see if it's really going to get past the 60 and probably maybe right up to the 70 next. And energy the last couple months. Now this is reversed. We had green, red, green. I have red, green, red, topping out here, and but I don't really see so much of a reverse in trend, right? It seems like prices, if they seems like you got some support here at 80 and again over at around 70. So it seems like if prices stay above 80, it could be positioning to go higher. But look at how the volume just kind of tapering off here. XLY consumer discretionary, nice strong candle here that basically just regaining this back, right? So sideways, and prices got all the way up here, pulled back, and it seems like this 160 is going to be an area that really got to see it get over. Consumer staples, overall, exclude this and exclude this, like it's just kind of gone sideways, right? Look at this, it's like back kind of right in there. I mean, I get it, it's not exact straight line, but it's kind of been wiggling really, if you want to say between like it's roughly between like 70 and 80, right in there, somewhere in that range. Utilities, kind of the same thing. We topped out, kind of got around the 75 area. It tested up here twice, tried to get it up to 80 and just didn't do it. Pulled back over here to 75 and then selling off the last 2 months, and this candle opening down here, which kind of doesn't surprise me when people feel, a lot of times what will happen is money will flow into these like growth stocks when people feel confident, and it will flow, and then when people feel less than confident, and maybe it's not people, maybe it's more like institutions, maybe it's a combination of both, whatever. So it doesn't surprise me that if like tech is going, if the tech sector is going up, that utilities might be going down. No, but your good buddy Brent, I like myself some utilities. It's difficult, difficult to run into obsolescence risk when you're dealing with water treatment. Water's probably going to have to be treated for the rest of human civilization. And then over here with real estate, just kind of been stepping down, right? And even though we had a strong candle up, okay, it's it's a little bit higher, but kind of in this range still, around that 42, somewhere really the 45 seems to be giving some resistance. And with retail, sold off here, kind of been going sideways, and it is starting to move up. Where that that's pretty good. You know, it's like seemed to be bottoming out, moving up. Now we're back to technology. So it, you know, when I look at when I look at these 12 sectors, and basically these 12 sectors make up they basically make up the stock market, right? S&P 500, Dow Jones, NASDAQ, Russell 2000. Those sectors basically make this up. Now, on the weekly chart, when looking at these sectors, it looks way more bullish. It really, you know, very convincingly bullish. And so monthly chart still looks a little sideways. So it could be early. It could be early in a movement up, because monthly candles are made up of weekly candles, right? So on these weekly for the stock indices, right, we see that the S&P 500 really moving up pretty well. Let me change this over here. And S&P, SPX, right? Look at this. See how this part is higher? That potentially is giving us a W pattern here with the with this right hand part being higher like this is giving us a bullish indication. And then the next thing, we got to see it really pass this, which you know, subjectively it did, but it kind of pulled back a little bit. But maybe prices can go up more. So by looking at this, I wouldn't be surprised if we were gonna test this. And let's see if that happens. If it doesn't, I mean, to be quite honest with you, whether it happens or not, I'm pretty much going to do the same thing over and over, and roughly going to make the same amount of money month in, month out. I mean, there's a little bit of wiggle room, but my trading style of selling cash secured put options on stocks I don't mind owning. If I certain stocks I want to own for a long time to collect dividends. Other stocks I quickly start selling covered calls. Sometimes I only sell like the covered call, like a 50 cents, $1, $2 away, you know, whatever, $3 away, depending on how much the stock moves, just to get a quick capital gains and get back into selling the put options again. So sometimes I'm just doing the wheel strategy. Sometimes I'm selling to acquire stock for a longer term. But my point is, whether or not the stock market really goes up or not, or down or whatever, I kind of end up making roughly the same amount of money all the time. There's a little bit of variation, but it you know, averages out over the last couple of years. It's pretty consistent for me. Although, you know, you can really, if you do more directional trading, you can significantly make more money. And trust me, I get it. Almost every day, waking up when the stock market's already been open for several hours, I'm like, ah. Anyways, so let's see. I think it's gonna move up a little bit higher. I don't know how much higher, but I wouldn't be surprised if it tests up here. And over here on the Dow Jones, we don't have nearly as clean of a W pattern, right? Because you see how we had that beginning. Here's the left hand part of the W. This should be kind of like the right hand part, right? Pulls back, comes up here, pulls back here, but you can see here, boom, it failed right there. Didn't really pass that. Didn't pass it with some gusto. Kind of fizzling out there. And the NASDAQ. Now NASDAQ not as powerful of a W pattern, because we got a low roughly somewhere in there. You know, depends where you. I get it. It's kind of subjective. You know, depends on where you subjectively draw it. You know, it's like, if you could say right there, right there. I mean, seems like it's a little bit higher up, right? And but nonetheless, we got this pulling back, and prices really seeming to get past this peak. Now we're dealing with this resistance right in here. I would imagine there's going to be this kind of zone. It's going to be some zone of resistance right in there, right through there, and then of course right in there. So let's see. I want to be surprised if prices in the next week are testing this up here. Now this one, you can probably see this. It looks pretty strong, right? Right side higher. Not a pretty clean looking W, and you can tell prices seem to be over that amount, and it's already starting to test this up here. So that's I definitely think that we could see some more higher prices next week. Could pull back, but I wouldn't be surprised if it went up. Really wouldn't be surprised if it pulled back either. But going up seems interesting. Now the weekend gold really sold off, which doesn't surprise me one bit, not one bit at all. For I don't know how long it's been since I've been paying attention to the futures price of gold. That's over 10 years. I think I first maybe started paying attention to the price of gold around 2006, 2007, somewhere in there. But it never surprises me if there's a big sell-off in the futures price of gold. Never surprises me. Crude oil also selling off. We really seem to be in this range from about I would say about the last several weeks. It's been about roughly about somewhere in the 80ish, low 80s to low 70s. And so strangles might be good on there. It would be horrible if you have no clue of how to manage futures trades, and if you have if you've got less than $20,000 in your account. Even if you have 20, you can quickly lose a lot of money being over leveraged with the margin in oil futures. So you best stick to the paper trading. There, I would say that if you're learning from the videos that I'm making, because I'm definitely not the old school OG that knows it all. So if you're learning from me, you probably want to avoid trading real money over here. But the futures of Bitcoin, hey, look at that weekly chart, right? It's coming up here to test this 25,000, right? Testing it, but it looks like from here that was a strong candle up. Look at that candle. Look at how wide that candle is. The range. Look at how this one's a little less. This one's a little less. This one's a little less, and at the moment it's negative. So we'll see what happens around this this area here around the 25,000. And over TLT, 20-year Treasury bonds. Look at interesting, right? TLT, doesn't that kind of look like this, right? Sort of, right? Doesn't that kind of look like this? You see that W right in here? But it's kind of look more like here. So one thing that Phil Grande has been talking about for a while is that whatever TLT is doing, the stock market tends to mimic it. And I'm kind of seeing it right there, right? The dollar, over the last 6 months, the dollar is just sold off. All right, we had this big candle right here, but look, how long is it going to get back up to here? I don't know. VIX is just over the last 6 months peaked up around here, around 30, 34, and just really been selling off and hitting this low of 17. Keeps making new lows, and that's the lowest 17, but closing out at 1833. Is there anything else that would be worth looking at the moment? Let's just take a quick look at the interest rates. We still have this inversion of the yield curve, but not as bad, right? Not as bad. These longer. Oh, excuse me. I am so sorry. I was looking at the high. I wasn't looking at. Oh, yeah, they're still pretty inverted. And what does that kind of mean? I've heard it. I'm hearing other people explain it better, but overall, you can kind of think of it like this: like it's sort of indicating a problem in the in the financial system or in the economy or the combination of the two. Where is basically the government is saying that when you lend the government money for 30 years, that's a 30-year risk, and they're willing to pay you 3.55% to risk your money for 30 years. When you lend the government money for 30 days, that's way less risky than 30 years, right? It's not even a year. It's only 30 days. And so why is it that the government needs to give people, or the treasury, whatever, if you're like, no, it's not the government, it's this, it's that. Like, I lump all those bozos into one category. And I get it. I'm not going to be passing any SAT exams by my definitions. And I don't give a crap if I can't pass the SAT by my definitions. I give a crap if I'm making money or not. And as I mentioned, I'm consistently making money. It might not be the highest amount of money, but I got a decent job. Takes a lot of hours. I live in Hawaiian Standard Time Zone. I pretty much feel like if I lived in the Eastern Standard Time Zone, I would normally wake up around 6:30, maybe market almost around 9:30, sit in front of a computer, probably day trading. Why don't you do that where you're at right now? I'll tell you why. Because I used to wake up at 3, 4 in the morning, and your good buddy Brent needs some more sleep. No, you only need 5 hours of sleep. Speak for yourself. Brent needs like 8 to 9 hours of sleep, especially like waking up at 5 a.m. Nope. 6:30 is good for me. Anyways, so yeah, so another thing we got to keep in mind. Okay, so this might show us that the economy, that there's a problem maybe in the economy, in the financial system. That maybe it's not a problem. Maybe problem is too strong of a word. But how about less than healthy? How about not robust? Potentially weak. I don't know. You can kind of fill in whatever words, that put in the right words for you, so you don't got to run off and cry in your safe space. But it's showing something. But you know what? The interesting thing about that is that the economy and the stock market are basically detached. You could have a really crappy economy, and you could have the stock market screaming high. So for me, what do I how do I use this information for myself? So number one, one of the first things that I use this information for is first and foremost is my mindset, my belief system. When people they're telling me the economy's great, and what do I mean by telling me? If I hear whatever people somehow on media or just any random person in society. Now, I don't debate these people. I don't say anything, but I just don't believe them. I can look around and I can see where restaurants used to be open, they're not open anymore. Now things are getting a little bit better, granted, right? They're getting a little better. I think I'm starting to see some new businesses open up and things like that. But what I don't do is I don't listen to the media and expect the media to be telling me the truth. I'm looking at more of what I'm seeing with my own eyes, and what the things like this yield curve. All right, for years, like 5 years, I've been hearing, the yield curve inverted, and maybe it takes time for these things to go through the system. But so how do I use it? Okay, so that's number one, is that it makes me like anyone that's just saying everything is great and everything is rosy. I'm automatically suspicious of how they get paid, who's paying them, what's their agenda. And that doesn't really matter though, because I'm never going to see these people and I just randomly hear them. I don't go out of my way to listen to them. But the other thing that it's having me do is that I'm just cautious. Like I don't want to fully buy into a bull market right now. And one reason why is that this right here, this movement up here, this movement up here, this movement up here, this movement up here, and actually, if we go back to, I don't know, I heard someone talking about this really started around the Alan Greenspan era, but definitely after 2008, there's a lot of just like quantitative easing, Operation Twist, get the same results as quantitative easing, but we're going to jump through hoops to try to convince you it's not quantitative easing. And so until they start doing something like that, which I heard, one thing that I heard is that they have, without really announcing it, that they're kind of doing that. So, unless I'm getting some strong confirmation that that they're going to be goosing the market and it's going to be going up, then I'm just being cautious. And one reason why your good buddy Brent is being cautious is like, once I start work, I can't really monitor. I can't adjust my positions. Basically, all the adjustment that I need to do before I leave the home, and then that's it, right? So I'm just being cautious. I'm making sure when I'm selling cash secured put options, I'm really selling at prices I'm comfortable at buying at, just in case there's like a quick turn to the downside. It seems like in the last couple months in here, it's been pretty volatile. We see we're getting past this point right here, past this point, we're coming up to this point, coming up to this point, and anywhere here in this like 420-ish type of range, I could see it coming up there and then maybe selling off. Now let's say it does that. Let's say it goes to the around the 420 area and it turns around and it sells off. Then you want to see what it's doing roughly around the 400, right? If it sells off from about 420 and it pulls back to about 415, not a big deal. If it pulls back to like 410, right? That's halfway between this 400. And then if it kind of starts like, see how it starts, these different points right in here, right? And this one, the distance between these two is longer than the distance between this one. Distance between here, shorter, and then real short here. So it does seem to be getting some strength to go up to the upside. So I would watch if it turns around and sells off. I wouldn't think that a market crash is coming. I want to see what's it going to do, especially if it doesn't even get close to 400. If it's close as it gets to 400 is like 407, then and it starts going back up and it's testing closer to like 415, 420, then we're probably building a base to go a little higher, right? So, but if it starts breaking down under 400, then we got to kind of see what's going to happen between basically between this 400 and 380. All right, so that would be some numbers to potentially watch for it going to the downside. But what if it goes to the upside? What if it gets around this 420 and it kind of keeps going up? Then at what point would your good buddy Brent say game on? That's a good question. That's a good question, because me, honestly, they have the saying in the stock market: bulls make money, bears get money, and pigs get slaughtered. And I fell victim to being a pig and got slaughtered a couple times. And it was only like maybe three times where it was like significant enough to really sting. So now I'm a much, I'm just a lot more cautious. Like I'd rather be the tortoise than the hare, myself personally, especially under my living situation. That is a key thing to really keep in mind. And when you're formulating your own trading plan, that is, in my opinion, the thing you should base everything around is your living situation. What time zone do you live in? What's your work schedule like? What's your family like? If you're like me, you're a single guy and you don't necessarily have the full obligations of somebody that's married with 2 kids. Like, you're married, you got 2 kids, and what age are these kids? Your kids are 15 to 18, they can kind of take care of themselves. If they're 15 months to 18 months, you probably got to pay attention to them a little bit more, right? And what I would suggest is making your trading protocol as such, if you have 15 to 18-year-old month children, that you can focus on being a good parent, right? You can still make some money. Don't don't be a disappointment parent because you're lusting for money. Right? Don't uh don't lose out on something that's more valuable than money. Good relationships with your kids because you chose to be an oinker. Right? Anyways, so at what point? I don't know. Maybe I guess I would have to see it kind of around here, around the 420-ish. But now what I would tend to do is like I'm going to be watching around this 420. If it starts, if it looks like it's breaking this 420-ish, I don't just mean this like exact 420, but I mean around that area. And when it's breaking through, the candles are looking strong, there looks to be some good volume, then probably what I might start doing is, like, at this moment, I'm mainly selling cash secured put options on stocks that I want to own, right? That's to me, that's my safety net. That is my, like, if the stock market crashes, if the stock market pulls one of these, and I got a bunch of, and I'm loading up with stocks that I'm comfortable to buy right in here, even though it drops down here, I'm cool. Because I opened that contract knowing that my worst case scenario is I buy the stock, and most of these stocks that I've been doing it on during this is what's been going on, are stocks that I'm potentially plan on owning the rest of my life. So I'm okay with it. I'm okay if I didn't buy them at the bottom, right? Because I just want to buy them at a price I'm comfortable with. So if the market keeps moving up, then what I'll do is I'll probably start, I'll keep selling cash secured put options on stocks that I want to buy, but I probably won't compromise my strike price that I want to buy them at. What I'll probably do is I'll probably start leaning more towards stocks I'm doing the wheel strategy with. Now, what's the wheel strategy? Well, at the 2-minute mark, I had told you that there's a video. Excuse me. In the description of this video, I talked to you about a playlist. Well, that playlist will go over the wheel strategy. But basically, the wheel strategy is you start out selling cash secured put options. You're selling puts until you get assigned. Now, what does that mean? Well, a put is an obligation to buy stock at a certain price. Sometimes it expires worthless, sometimes you get assigned. So you sell put options until you get assigned. And now, when you get assigned, that means you take ownership of at least 100 shares of stock. Why 100 shares? Because option contracts work in increments of 100 shares. So now, you sold put options, which brought you in money, and you did that for however long until you took assignment of the stock. And now what you're going to do, since you have that stock, you start selling covered call options. What's a covered call option? A call option is basically the legal commitment to sell stock at a certain price. And at some point, that stock is going to be called away from you. So now you own 0 shares of that stock. Then you go back to selling cash secured put options. Now some stocks I do this on that I don't really care if I own the stock the rest of my life. It's more like I probably do the wheel strategy on the stock the rest of my life. It's not so much there's certain stocks that's just, I'm comfortable doing that because it has pretty good premium. They tend to be volatile enough, and also if I got stuck with them the rest of my life, I'd be happy with it. But I'm not going out of my way, to really. They're not like necessarily the best fundamentally sound stocks, and they don't necessarily have the best dividends, and they don't really fit into my overall plan of what I'm dividend portfolio that I'm building. So when I'm like 80 years old and have dementia, I still have money coming in without needing to analyze a stock market. I can just collect those dividend checks. And so that's what I'll probably start doing. And why would I do this instead of taking directional trades? I might still take some directional trades, but I like this because, again, the time zone I live in, the lifestyle I have with like my work schedule and all those type of things, this just works really well for me. Right? I can do this. I can do this and never stress out, right? And I've had times before where I like sold credit spreads, put credit spreads with like 1 day till expiration, 2 days till expiration, and then like I'm I got to go to work and I'm watching the stock price. I'm not literally sweating, but I'm sweating. I'm like, oh my gosh, am I going to lose money? Should I adjust that? What should I do? Should I get out? Should I roll it? Should I do this? Should I do that? Right? And I don't have to do any of that stuff here. I just do it until assignment. Do it until assignment. Do it until assignment. And so that's probably what I would do. And if it keeps going up, I'll probably look for easy entries also. Like what do I mean by that? Like I can. One thing that Phil Grande really beat in my head is this W pattern, right? So it sells off here. It's not a totally clean W, not as much as like we had a W right here, right? But who would really know it's going to shoot up that high? But I see something like this, right? I see it come up. I see it have a pullback. I see it start turning. I see it kind of like looking over here. Okay, I see it drop down. All right, I see some. It pivoted here. Now it's here. Oh, look at it. It breaks. It breaks that point. Then I'd probably take profits right through there. But you might be, Brent, you could have made a lot more money. It would go up there. Yeah. Get it? I don't give a crap. I could have made a lot more money. I'm busy. I got a busy life. Like, so who was it? I forgot who I was listening to say this, but he's talking about the Jack Schwager books, and I guess like Jack Schwager, interviewing all these people through Market Wizards and all these different really profound traders. I guess it was very common for them to say, you know what, the one thing I regret is I sold too early. I sold too early. And then because Jack was interviewing all these people, he started putting together. And he's like, you know what? I don't think that was a mistake. I think that each one of you are in your position because you're all saying it and you're all stand out. You're phenomenally wealthy from trading. And you're all basically saying that, oh man, I sold too early. I sold too early. So maybe there's something to taking profits, right? Bears get fed, bulls get fed, pigs get slaughtered. But you do you. I don't know what your lifestyle is like. I'm not a certified financial planner. I'm just telling you what I see. And the only reason why I'm telling you is not for you to do it, is for you to listen to what I say and start looking at these charts on your own and try to figure it out for yourself. In no way, shape, or form am I attempting to get you to rely on my opinions. I want you to rely on your own opinion. I feel really strongly about that, and I don't exactly know why, but I can tell you where I first heard this. Why? Ooh, holy guacamole! Dang, man, I got a book in Michigan that's selling for $280. I bought that for like $20 back in 1997. Look at this. It's over. Oh, that's a different one. This obviously is a classic, right? So go ahead if you want to read it. Oh, well, Yep, yeah, that's about. I bought it in 1997. Came out in 1996. I bought it in 1997. But anyways, this book really changed my life, and not only with weightlifting, but thinking. So what Mr. Menser was saying here is that you want to learn how to be your own coach, and for some reason this sticks with me. So you do not have to rely on the suspect opinion of other people. And that's what I'm suggesting for you, right? That's what I'm trying to do for myself. I don't want to rely on the suspect opinion of other people. And I think that's one of the greatest gifts. And since Mr. Menser gave me that in theory, got me as a young gentleman, starting to think like, don't rely on the suspect opinion of other people. You don't know what their agenda is. You don't know anything about who they get paid by, la da da. And learn how to think for yourself so you can make your own decisions. Because, my friend, you can. You can 100% do it. All right, check out that stuff at the 2-minute mark. Check out the stuff in the description of the video. I hope you guys have a fantastic Sunday. Aloha.